What is the numbers being recorded?
Hello, everyone. Thanks for joining us today for the banking webinar. It's great to have you here. I hope you're having a fantastic day to start with. Let me begin by introducing myself and AI Course Spot to you. I'm Nitin Naveen, Vice President of Innovation and Strategy at AI Course Spot. With over 2 decades of experience in consulting firms dealing with emerging technologies, I feel fortunate to consistently engage with numerous stakeholders, global leaders, and their incredible problem solving and innovative ideas. Joining me today are a couple of my colleagues as well, that is Arvind and Naveen, who will add some energy to this event. A big applause to them for their dedication and making this event a great success. Let me tell you something about our company, AI CoreSpot. It was founded a couple of years ago. It's a knowledge hub focusing on AI, ML, robotics, IoT, and much more. Our webinars aim to share the latest technological advancements in the industry. We delve into various tech sectors, unveiling a fresh theme every month and steadily gaining momentum month on month. Our goal is to become the leading AI-driven community worldwide, where individuals like you with similar interests can contribute to mutual growth and success. We are committed to organizing industry-backed webinars and hybrid events, grounding our knowledge through credible data from esteemed industry leaders, subject matter experts, thought leaders, and all our trusted partners. Additionally, we fine-tune our content across various digital platforms like blogs, videos, podcasts, and newsletters to shed light on the ever-evolving industry. Now coming about today's webinar for which you are here for. Today's topic is how technology is automating and improving banking process. You all will learn various tech-driven transformation which is enhancing banking efficiency through automation and innovation. We'll explore various subjects including automation, negative impacts of technologies, latest technology trends, and so on. Our expert panel will share valuable insights and engage in thought-provoking discussions that you won't want to miss. Now let's kick off the discussion with some quick highlights. Meet our community partners for today, which include some great companies: Credit Suisse, Marsh McLennan, Discover Financial Services, Buck, and InfoVision, who played a crucial role in making this webinar a success. Also, a big thanks to all our attendees. Your time and presence means a lot to us. We appreciate your being here to achieve your goal and connect with fellow participants. Our platform's main goal is to help you gain valuable insights and build meaningful relationships. So if you leave with a few innovative ideas or build new connections, we'll consider it a job well done. Now let me introduce our esteemed speakers for today. The first speaker is Satya, who is VP Data and Analytics Global Head of Cloud Platform, Data Engineering and Management, Machine Learning and AI. He is representing Credit Suisse. Our second speaker is Srinivas, who is VP Global Data and Analytics at Marsh McLennan. The third speaker is Jennifer, who is Director Digital Platforms at Discover Financial Services. Our fourth speaker is Christina. She is Director of Product Management, Apple Rewards Storefront at Buck. And last but not the least, our fifth speaker and moderator for the panel is Brett, who is Associate Vice President at InfoVision. Just one liner disclaimer before we start this webinar. The views shared by all the speakers are their personal ones, and it's not related to any organization which they represent for. So now over to you, Brett, to begin this exciting panel discussion.
Thank you, Nitin. Thank you. And thank you. We've got a great topic today. We've got a great set of panelists. Thank you again for participating today. Looking forward to today's discussions. And folks who are attending globally, please drop questions into the Q&A section and we'll work those in as we're going through today's session. Why don't we get started? I'm going to start with you, Christina, and see, share some of your views and thoughts on why automation is important to financial services and the banking industry. And let's kick things off with that and open the discussion up to the team.
That sounds good, Brett. So first, thanks for having me on here. I think, before we talk about automation, I think it's first to just align on what automation is. So automation is the use of technology to perform tasks where there's minimal human input. Automation is not technology in and of itself, but the use of it. And oftentimes I would think, within organizations, the thought is that if there's multiple technology components, then they check the automation box. And that's just not the case. Now, when we talk about why is it important for financial services and just banking industry as a whole, I believe, and I'm sure that my panelists here would agree that, it's not just a priority, but if you don't do it, you're getting left behind. I think, the pandemic not only shifted the way that we're doing things, but it impacted just consumer expectations overall, which just fundamentally changed how we must operate and deliver value to customers in the banking industry. So from my lens, automation is quickly becoming a matter of survival rather than an option, I would say that. So just last week at my company, we're really big on always looking at customer feedback when it looks to just loyalty and rewards. And what I see often in that research, in the feedback and case studies is folks are saying, save me time, save me money, and make interaction with you easy. And the key way to doing that is automation.
Good. Thank you for that. Anyone have anything to add to that or want to?
I think Krishna covered pretty much everything.
Yeah,
I do agree with,
automation.
I do agree with Christina in saying that it's not about if we use the technology for automation, rather it is when do we use, right? So now the situation is that if the organizations don't use the technology to automate, they're left behind. They lose a competitive edge.
And there's tools out there, right? And to your point, Christina, if you don't look to use automation, you will get passed by and you will struggle with customer experience. But I think that's important to make sure that we're not leveraging automation and disrupting the client experience so much that it's not making a great one for the end customer. With that said, maybe Satya, if I pivot to you, let's talk a little bit about disruption and the banking industry and automation as a whole, and dive more into kind of the disruption portion of it, as opposed to kind of how and why it's important to banks and financial institutions.
First of all, I appreciate AA Core Spot and Infusion for putting this together. Really appreciate all this esteemed panelists, and I look forward to this engaging conversation for the next 1 hour. And also all the attendees, I encourage everyone to put in their questions so we could have this engaging discussion across the board. Disruption. Now, if we look at the entire banking industry, we could see this in 2 core models, a traditional banking and a fintech model. Now, there has been a lot of disruption happening within fintech space, but traditional banking is also trying to catch up. Why? Because ultimately, everything is boiled down to the customer experience and the demographics. With the ever-changing demographics and their need to move towards digitalization, to have that strong omni-channel experience across banking, whether it's mobile, whether it's in branch, etc., we are experiencing and seeing a lot of disruption. And as Krishna pointed out, this experience and these needs, digital needs, exponentially grew during pandemic time, when pretty much most of these services moved to digital space. So we could talk about automation for efficiency, we could talk about automation for controls, governance controls, etc. But the core driver has been customer experience, which has been evolving with our times, especially during and after pandemic.
Absolutely. Satya, you bring up an interesting point, and maybe we can elaborate a little bit on this. You've got some of the newer neobanks and some of the other banks that have come in and have built the bank off of automation to some extent, and then you've got some of the older banks that are looking to adopt automation or trying to catch up from an automation perspective. Maybe we can spend, and I'll open this up to the panelists, the larger panelist group as well, with regards to kind of what are the thoughts and views. Are the traditional banks catching up? How are they leveraging technology versus maybe some of the newer banks? Let's maybe spend a couple minutes there.
Satya brought up some really good points, and there are digital native banks and there are those traditional banks. And what allows those traditional banks to catch up for those that were built digitally is really paying attention to your data foundation. So your data foundation is what is going to drive the ability to automate and catch up, like some of the digitally native banks have. It's tough to get people there, though. When you generally grow up as a company, you start one place and you add something else on, and everybody has their own data sources. So bringing those together, stick with it, everybody, because it's a process. And don't let people get bored and tell you, oh, it's just not fast enough. We have to stop that work. Keep it up. Keep working that digital data foundation so you have your customer interactions available to even get to an omni-channel experience. There are no panelists, and especially my data colleagues on the call. What do you think about the data foundation?
Absolutely agreed.
Jennifer. Let's there's obviously always positives and negatives to some of these things as we look at rolling out new technologies and new solutions. Srinivas, if I can pivot to you here quickly, are there any negative impacts? So let's talk about some of the negative impacts or things that folks should be thinking about when they're implementing or using new technologies and automation.
Absolutely. First of all, thanks for inviting me to this session. Great to be here with this great panelists. Historically, technology has always been an enabler, not just in the banking industry in general, right? Either improving our services to provide better customer experience, or to be competitive in terms of the products that you provide, features you provide, staying ahead of your competition. The transition from mainframes to web-based to mobile at some point, or during the turmoil that happened around 2008, and then also be the pandemic, right? So technology has helped banks to be competitive, to provide their services in a better way. But every good thing has bad side to it. It all depends on how do we use technology for its positives. While we implement these technologies to automate the processes to provide better customer experience, it's very important that the organizations keep an eye on the negativities of implementing these technologies if these things are not taken care. For example, with invent of AI, Gen AI, we are more reliant on data to build the models or to make the decisions based on the output of those models, right? So the organizations and especially the banks need to make sure that they use the right data set with right data quality, so that the model outputs are not biased towards any particular gender or particular demographic or particular region, religion, or anything like that. So that is the key thing that the banks will have to keep in mind when they start adopting and implementing the AI, Gen AI as we move forward. The other thing is the privacy and the regulatory aspects as well. The human accountability increases with the technology, right? It's not just taking the output of these models and then using as is. There need to be a proper validation. At least the trust is built on the models, right? There has to be a proper human accountability to make sure that they don't get into any legal or regulatory issues while using these technologies to automate. Of course, there is a pressure, as Christina was mentioning. We need to use the technologies, we need to automate to stay ahead of competition. But it's very important that organizations keep in mind the negative aspects of implementing these technologies as well.
Great points. And to the point, you can't set it and forget it, right? And Jennifer, I see you kind of nodding your head. Anything to add there?
Yeah, I love what Satya is bringing up, because models can drift, and it happens because consumer behavior changes over time as the environment around us changes. And if you don't have those controls around those AI models, they're going to drift, and you find yourself getting behind one more time. So you've got to keep up with that skill set, the automation, and checking in on the drift of your models, that your expected outcome hasn't changed.
Great points. Thanks, Srinivas. Thanks, Jennifer. Let's maybe pivot to the customer experience. I know we've touched on that a little bit as we've gotten started this morning, but let's maybe go a little deeper in customer experience. Jennifer, how are you seeing technology enhancing the customer experience within banking processes, within financial services?
You know, since the advent of the computer, we've been automating, and we're all used to automating input of a form, but automation's changing, especially in that customer experience space. Now, instead of presenting everyone the same form, with AI, Gen AI, we can personalize. We can take what we know about you and give you an experience that maybe is slightly different than the person before you. So when it comes to the customer experience, AI is really giving us that opportunity to personalize, to get that next best offer for you. You know, you all shop at Amazon, right? So we know, people like you usually buy this. Well, how do they know that? They know that from your shopping habits. It's the same thing in the banking industry. What do I typically respond to? My email, my text, or my push notification? All right, you usually ignore your email, but I know I can get you via text. So how do I spend more of my time in that channel where you like to be? So customer experience has changed, and it can continue to change with everything you know about your customer.
Great point. I think the key there too is that getting to know that customer and how they want to interact, right? Because you can push customers away if you're trying to force them into a certain way of communication that they're not comfortable with or used to using. Anyone else on the panel want to add to that or have additional comments, questions, directions we want to take that in?
Definitely. The aspect of customer experience is changing. Earlier, it's no more that bank offers set of products and then customer wants to use one of them.
Yep.
It's more about banks customizing their products based on customer expectation or customer wants. It's no more a need, but it's more on the wants, right? Srini wants to bank in certain way, or Srini wants flexibility in using one of their products. That aspect of customer experience, I think, is going to be prevalent at least in the near future.
Just to add to what Jennifer and Srini mentioned, the element of customer experience or customer service through the traditional channels of in-person is still intact. But then this overall automation that is happening within banking industry is covering broad demographics and providing more options to the customers. And essentially, it is also helping derive those insights and provide that custom experience to the customers, which will attract to the banks, the clients to the customers to the banks. For instance, with the power of data, we could try to identify the customer patterns, interests, their own personal situation, financials, etc. And the intelligent models could provide those recommendations, which could be sent to the customers and then try to increase the customer base as well as improve the customer satisfaction.
Absolutely. Hey, on that point, Satya, maybe we can kind of go a little deeper too, and I'll open this up to the larger panelist group too, from an automation perspective and how that transformation and things that are out there, how are banks interacting with customers and using automation to interact with customers? Maybe let's just go a little bit deeper there while we've got a couple minutes.
I would say two parts. The driver has always been improving the customer experience, but also cost efficiency. Now, cost efficiency cannot be a business driver, but the increased ROI is a business driver. So what I meant by this is the customer experience is more available now, but at less cost, at less ROI. For instance, the advent of chatbots using automation, using technology disruption is helping more and more customers 24/7, unlike in the past. The second thing is, which we discussed, the kind of recommendations or the customer custom solutions that banks are able to provide to the clients, and having that interaction and dialogue going on and providing and identifying more and more services is the way that has had the most disruption in how banks are interacting with the customers.
Good. Anyone else have anything to add to that?
I love that Satya brought up the idea of the digital worker and how there are digital workers out there that help with that experience. You know, many of us may start in that click to chat window, right? You've got that little chat on the screen and you start a conversation, and you can go as far as the digital worker can go, and you've either solved your problem, maybe reset your password, or they've passed you on to an agent. So when we talk about these customer experiences, these automation opportunities are really creating new jobs, enhancing the way that others do their jobs. They're able to collect and pass off information to our humans that are sitting at the other end of those chats. And you don't need to be afraid of those kind of technologies. There are great partners. There are brainstormers. They are our suggesters that then allow folks like ourselves to take those things and those ideas forward and blow them out into a strategy and implement that next set of automation opportunities. So when we were talking earlier about disruptive and negative impacts, you know, don't be afraid of these things. They are not here to put you out of a job. They're here to enhance your job and create new jobs.
Great point, Jennifer.
For
If I
sure.
may just add one more point, it's noteworthy to identify the kind of integration capabilities that the automation has brought in. For instance, in the example that Jennifer mentioned about customers starting with chat and then trying to move on to a agent live who could provide them some service, that integration capability has been enhancing over a period of time, aided by automation. And then also think about that omni-channel experience, whether the customer is logging in from desktop or mobile. The experience has been seamless. The transition has been seamless now than before.
Yeah, and I think both the customer, to your guys' point, the customer and the banks are benefiting. Even I think from a bank perspective or a financial institution, the technologies are a point too now where if customers do get frustrated or bail out for whatever reason, they're getting that information and data either real time or at a point in time where they can then reach out and follow up. And so if it does lead to a customer experience that's not the greatest, they've got the opportunity to make that better or follow up or reach out and continue that dialogue or just check in and make sure that whatever they were trying to get done got done and they don't need any further assistance.
And just to add to that, Brett, I know at least on my side in the reward space, we work with financial institutions to provide loyalty products and offerings, right? And one of the things that our clients, the banks, come to us and say, you know, how are folks navigating online? Are they getting stuck? Are there friction points? Are there products that they're interested in, but they didn't make that decision? They put it in the cart, didn't hit submit. Are there opportunities for us to now think about different program offerings to say, hey, now you get 5% cash back on X particular product? So I do think when it comes to automation, banks are doing a really good job of taking a look at what is the online behavior, what are folks interested in, is my card top of wallet, if not, why, and just noticing when the shift in behavior is changing and then reacting to that. So I think that's a good point that you touched on.
No, and the rewards and loyalty space is one that's continuing to grow and getting creative and drives behaviors and customers. So I think we've just got started on that journey. So excited to see where that goes. Very good. Let's maybe pivot a little bit to trends and things we're seeing. And Srinivas, you touched a little bit on cloud and AI and machine learning. So I'm going to kind of pivot to both Srinivas and Satya here, and then obviously Jennifer and Christina, please weigh in as well. And hopefully we'll start to see some questions coming in from the audience. But let's talk a little bit about the trends and what we're seeing in the banking space and systems and processes and leveraging cloud and AI and machine learning. So maybe Srinivas, will start with you. Satya, then feel free to weigh in, and then we'll open it up to the larger panel and group as well. Srinivas, I don't know about Isn't it? Can you guys hear Srinivas?
Yeah. I can you hear me now?
We can hear you now. We lost
Okay,
you for
great.
just a second.
Yes, sure. While we want to focus on technologies that will help us to improve our automation, but it's key that we look at the processes that the banks and financial institutions want to improve further, right? So using the technology. I want to carry on from what Satya mentioned about the omni-channel experience. As a customer, I should be able to start at my home on a laptop. We should be able to finish my whatever I'm trying to do on the mobile, and then I reach the branch, and then I should be able to get the continued experience, right? So that reconciliation processes, settlement processes, and then self-service are some of the aspects of the banking processes that technology will definitely help to improve further, right? So there are different aspects like the blockchain, AI, Gen AI, or digital currency. These are some of the technology trends that I see as emerging over next 15 to 18 months that would definitely help banks to improve their the automation. These are the concepts. Things can be implemented using different service providers behind the scene, but these are the areas that for sure I think will drive the automation over next 15 to 18 months. And of course,
Great points.
cloud AI, machine learning are the things that will drive. And then of course, as Jennifer and then I highlighted a little while back, the data is going to be the driver. Right now people call data gold, fuel, or whatever it is, but AI, machine learning are nothing without a quality data. So not only the capturing the new data, your historical data, which is of great quality, is going to be critical to use the or leverage the AI and machine learning for betterment of the processes.
Well said, Srini. Really great points. Just to add a few more points. Now, we talk about cloud, we talk about data, we talk about machine learning models, etc. But what is the business driver? What are we trying to achieve? We are trying to achieve a better service for our clients and customers, and trying to identify some of the products that we are not able to identify in the past. But how are we doing this now? As Srini pointed out, with quality data and with consolidation of the wealth of data that we have at one place, and having that ability to look at all those data points centralized and consolidated. And then with the advent of all these models, intelligence models, it is also helping us in identifying some of those custom products for certain demographics. Now, just to replay this a bit, with the entire digital transformation journey, we'll have the ability to integrate all the disparate data sources, regardless of where they are, on-prem, cloud, Excel sheet, etc., at one place. Then we will have the ability with automation to curate and cleanse this data. Why? Garbage in, garbage out. If we do not have the right quality in the data, then we'll have inherent bias in the models or the products or even the decisions that we are going to make. But how do we automate some of these aspects? Do we have enough compute, enough scale, enough scaling capability to perform some of these automation activities so data is cleansed on a periodic basis, on an ongoing basis? That's where the cloud capability will come into picture. We will have the ability to scale the infrastructure at will within seconds or minutes versus months if we are to be on-prem. And then as businesses grow, it will be inexcusable problem to miss the time to market opportunities and speed to market opportunities. And finally, with the AML models, they are disrupting the industry in terms of identifying the risk patterns, in addition to also identifying specific recommended products to the customers.
You bring up a point too, Satya, that I maybe want to elaborate on a little bit or get the panelists' view on. I hear a lot, or at least I have historically, we've got multiple systems that don't speak to each other. The data, we can't always rely or understand or make sure that the data is accurate. Has that gotten better over the years, especially with some of the newer technologies and automation? Are there still concerns? You said, crap in, crap out. You hear that a fair amount. Is that improving? Has it gotten better? Or are there still concerns that, hey, we can't 100% rely on the data because we've got so many back-end systems that aren't speaking to each other. The data doesn't sync up. There's discrepancies, etc. Any thoughts from the group on that?
No, I mean, I'd like to take that. Definitely, it has improved over a period of time. It's not just because of technology; it's because the governance practices as well around the data, right? So organizations want to collect the right set of data. Example, probably 15 years back, our banks didn't have as much information about customer as much they wanted. With the KYC being a mandate, now you have better information about your customer, which is very useful for various reasons: to know your customer better, serve your customer better, provide them an opportunity to say, hey, don't disturb me, I don't want to receive your marketing material and all that, right? Things have certainly improved, but if you ask, are there opportunity for further improvement? Definitely there are. The quality of the data can be improved further with further enforcement of data governance practices.
I agree with Srini. He brought up a really good point, data governance. Now, technology is improving. It's making the banking industry's life, or for that matter, any industry's life, in managing the data and cleansing the data. But that's not really completely helping the data problem that is on the ground, because imagine the volume of data that we are consuming now, the variety of data that we are consuming now. That's number one. Number two, is there enough advancement on the data governance processes? Maybe not with the pace at which the data volume is growing. So we have to step back a little here and then talk about the ideal data governance structure, the stewardship, the right business rules to cleanse the data and identify the golden nuggets within data. Only then we'll be able to see the power of data, and then which will enable the insights or any other recommendations.
I think the other interesting phenomenon that goes on in this space is we all have those front end systems that feed a system of record, right? And if at some point in time when we built that, we didn't designate something as a required field, it's empty when it comes in. And people always want to know, can technology fill in that data? Well, I can't make up data where it didn't exist. Now, there are opportunities to derive things, but we have learned from all this data that we've collected that maybe we need to change what we're doing in those systems of record as well to help us improve. And sometimes that's a little bit of a harder convince too. Need you to go into that front end system and make sure that that's a required field. Hey, can you go look at your database and tell me, are there blanks and nulls where something's expecting down the line some information? So there's a two-way street here. Yeah, the technology has definitely improved on collecting that unstructured data and making something valuable out of it. But unless you're going to work on that data quality, that metadata management, that governance that my colleagues here have mentioned, you can still find yourself stubbing your toe.
Absolutely. Great points. Let's maybe pivot a little bit, right? Everyone's got their day job. Automation is important, but Jennifer, maybe let's get into how do we get automation done along everything else, right? It's not just automation. There's a lot of other things happening within the banking and financial sector, things that need to get done and whatnot. So let's maybe jump into that space there and kind of how do we prioritize and how do we get everything done that we want to get done, not just automation.
You know, when you're one of those digital natives, this isn't as hard. It's more about those companies that have been around longer and need to transform. And automation is a way of thinking. When we talk about the digitization of an organization, it isn't just what we present to a customer. It's how we do our own work, whether we're technologists or we're a business analyst. So automation permeates the core processes in the back end, how we deploy our code and how we interact with our customer. The first thing is you just have to decide. You have to decide that this is important to us, and there is a business value. I love that Satya brought up value. You can attach a business value to any automation that you're going to do. As an example, we want to automate the work of your technologists. Why? So we can deploy more frequently. If we can deploy more frequently, your speed to market as a business leader, it's huge. So when we don't give our technology teams the time to automate those pieces of their work, you actually lose out on business value. And we don't always do a good job of talking about it. So the way that you get it done alongside everything else is you choose to dedicate people that have a skill to do it. If you make it a part of somebody's job, it never gets done. So you have to make it somebody's job.
Yeah.
So we dedicate the time, we dedicate the skill. You bring people with the mindset. When you have somebody on your team with that mindset, it unlocks it for people who aren't used to working that way. I get what you're saying now. Let me give you this idea. Can we automate that too? And then the last thing that I always encourage teams to do is build it into your requirements. Don't move on unless you've done it. My favorite conversation with my partners is always, if we cut that automation, we'll deliver faster. That only happens one time. If you take that mindset, you're actually stealing time from the future. If you take the time to automate, it's faster every single time, not just the one time you decided to cut it.
That's great. Thank you for that. No, it's got to be part of the culture, right? You've got to have somebody driving it. Everyone's got to be on board. If it's just part of your job, then it could be out of sight, out of mind, and then you fall behind, and then it becomes difficult to stay competitive and get caught up. Very good. Let's maybe pivot a little bit to loyalty and how people are engaging, and even the younger consumer. I think at least what I've seen is that for some of the younger consumers, they may bank with multiple banks, right? Because one gives them, the loyalty piece. One gives them, a better rate from a savings perspective, or, the rewards that come with, a credit card or an account that particular institution is offering. So, Christina, if I can pivot to you a little bit, let's talk a little bit about brand loyalty, consumers, what fosters that loyalty, what keeps individuals within that institution, as opposed to, if they're not satisfied, making a switch.
So I'll say if we hone in on, because you mentioned, right, the younger consumer, the younger customer, maybe we should put a number on it, like those that are 25 years old or younger. Like that generation knows nothing but digital, right? They have information at their fingertips. Their tolerance is super low. So when it comes to engagement, they're really looking for less experience, so to speak, but really engagement. And they're looking to be rewarded for their behavior. I think one thing that, marketing and social media has really leaned into or focused in from a banking perspective is because we understand that the younger audience really does trust their friends or those that they follow more than their banking institution. It's really big for banks to just focus on, how can I highlight more of, the value that my company brings? I bank with, I'll just say this out loud, USAA. And really it's because I have an emotional connection. So my grandfather retired, Lieutenant Colonel. My dad was in the military. And while I do have other banking institutions, there is more of that. I'll say it's a difference between customer loyalty and brand loyalty. So that brand loyalty is more of, I have an emotional connection with you. There is more of a long-term commitment there, as opposed to customer loyalty, which is I'll stay with you for as long as there's a benefit, right? And so we're seeing, at least with the younger audience, really that focus of I'll bank with you until I feel like you no longer care about me. And it's so important to at least focus for that audience on how can you be with them along the way. We think about it like the credit card life cycle. If you know someone that's struggling in debt, then it's opportunity to focus on maybe content, right? To get them content in moments that matter, to say, you said you had this goal. This is where you are in saving towards it. Let's keep reminding you. Let's keep nudging you to focus on that. We're watching your spending patterns. And because we are your bank and we care about you, let's get you content that will help you accomplish your goals. So I do think that, if we could start to think about being with a customer along the way of their life cycle, what are they dealing with? Then that shift will happen between customer loyalty and brand loyalty, where they have that more of that emotional connection here for the long haul with you. I think we'll start to see more of that in relationship banking.
Absolutely. Great points. And maybe Satya, if we can, let's go into that a little bit more too. And I'd like to get your thoughts on, how automation is affecting the competitive landscape, and maybe just piggyback off on what Christina just mentioned.
It's pretty much similar to the kind of two support models that we are seeing in banking industry. When I say support models, we are seeing the traditional banking and we are seeing this digital banking. Now, we all have noticed that the entry of barriers into banking industry has diminished. For instance, we have seen advent of a lot of virtual banks in the past decade. And there has been a lot of disruption, especially from the point of getting into the banking industry, providing those digital services, providing those custom services in the fintech space. And in my perspective, the traditional banking is trying to catch up, and they're doing a better job of catching up. But there is still some gap where traditional banks are competing with some of these virtual banks, which are purely relying on digitalization and automation to maintain their market share and market position.
To that point, and I'll open this up to the group, should some of those traditional banks try to compete, right? At the end of the day, and Christina, to your point, USAA, everyone knows USAA, right? And what they offer, great institution, serving the military community, couldn't be better. And they do they're probably one of the top automated institutions as well, right? They do a lot of automation, but at the end of the day, I think they know who they are, they know their customer. And I guess on that point, I'll open this up to both Christina, Satya, and the larger group. Should certain banks go away from that core, set of capabilities that got them to where they're at and try to compete with some of these other more neo-automated banks? Or should they continue to focus on, where they're at and where they do well and the customers that they serve? Doesn't mean they can't continue to do automate and do more, but could they get into trouble by trying to do some of the things that maybe some of the other neobanks are doing and serving a purpose for a different audience or a different group of customers?
If I may on that, definitely the traditional banks had no choice when during the pandemic, but get more competitive, more digital, right? So even the consumers of those traditional banks have learned to use the banking digitally without, every time they need something, they didn't go to the bank because of the restrictions around pandemic. Traditional banks have caught up, but to your question of should they go away from the aspects that they brought them here and then completely move into digital to compete with the fintech or digital banks, that's going to be a tough call because how do you go away with your legacy completely? Carry on it for a while, watch and make a progressive transition towards digital banking. Who knows, that mix might be very competitive for them maybe a few years down the line.
A lot of larger institutions are diversified as well, right? So there may be capital elsewhere that helps it to advance their digital banking or keep other products rolling. A lot of times with some of our fintechs and our startups, they've got a smaller footprint, they're counting on venture capital, and the larger institutions can continue to place focus because they've got other businesses that might be able to invest in the transformation of one.
Very good question, Brett. In fact, if I may chime in, I'm glad we are discussing this because we are pivoting from automation topic to strategy topic. That's my favorite. Now, The question, should the larger banks or traditional banks mimic what the smaller banks are doing? It depends. It depends on their business model. It depends on their broader strategy of what market segments they are trying to get the attention of. For instance, if there is no competition from the digital banks or virtual banks in certain market segments, for instance, investment banking, for instance, capital markets, etc., then they do not have to focus much to mimic digital banking. The most significant aspect of digital banking disruption is happening within retail banking and wealth management. This is number one. Number two, if a larger bank wants to mimic some of these services, and again, to how Srini pointed out, there is no choice but to adopt the disruption, but there are multiple ways to go about that. There is a strategy of build versus buy that CEOs talk about. Does this big banks need to really go in and start developing those features? Not necessarily. There are multiple ways. They could leverage existing capabilities that a lot of third parties are providing and then integrate those seamlessly and provide those services. Versus, from the strategic perspective, if they also want to have that share of the market segment, focus on mergers and acquisitions, acquire some of these smaller banks or virtual banks and bring in those capabilities into the space.
Absolutely, great points. I see a couple questions coming in from the Q&A. So let's take one of those, and I'll just open this up to the group. It looks like they want to kind of get into a little bit more. We touched on this a little bit, but maybe we can go a little bit deeper. The role of mobile apps and online platforms in automating customer interaction and transactions. Let's take that one for a little bit and just kind of go deeper on mobile apps and online. I know we touched on it briefly, but let's go a little deeper there. Anyone want to take that one?
You know, I'm happy to start. When we talk about mobility, I mean, who doesn't carry their little phone around with them everywhere, right? I mean, I bet you every one of these panelists, it's sitting right next to our computer today.
It almost gets used more than the computer, right, Jennifer?
It does. And they have the power of a computer anymore today as well. And so the ability to be with your customer, no matter where they may be, is very powerful. I may decide to pay a bill while standing in a really long line, to check out at the grocery store. I may be combing through my email. So the rise of mobility is very huge. The company that I happen to work for, we always say we're mobile first. And many companies, the websites are more advanced than the mobile apps because the web has been around a little bit longer, but everybody's really starting to place that focus in mobile. Can I get it to the right size? What is the smallest amount of information I need to collect from this individual to have a good experience? So I think it's pivotal. I think it's key part of our strategies to ensure a good experience on that little small thing that people freak out when they don't know where it is.
with the advent of digital currency or mobile pay,
wallet.
I've seen in me being from India, I see that there is a revolution in terms of how the payments happen, especially in the retail area right now. Right from a off-street vendor up to a bigger stores, everybody accept mobile payment these days. I mean, people are less and less carrying cash. They use their mobile phones to make the payment. And then also, as Jennifer was saying, you can do your banking on the move. You don't have to go to a branch, or you don't have to sit at your desktop to do certain things. So with all those expectations, the mobile apps are going to play a very critical role.
I'll add to that. I can't recall maybe just sit down dining, but I never pull out my card anymore. Like for me, it's point of sale. I'm always here and doing either like just Apple Pay or just real-time payments. But when we think about like point of sale, real-time rewards, that instant focus, I think, is what mobile has shifted us to. And so when we think about, everything is really at the fingertips, the way in which we operate, the easy access to information is forcing banking institutions at a large to just think about really just speed and empathy, right? Like, how can I be there for the customer when they need me the most from this little device that we know they always have? And so that's huge. At least for me, I say, man, maybe I should dust off one of these cards. I don't know, but I'm always first. And I trust the transactions there, and I'm able to real time just see what's going on. What did I do? Yep. So everything in line. I'm doing all my transactions while on my phone.
Absolutely.
And it's easy to
I couldn't
spend
have
as well.
Fingertips.
I couldn't have explained this better than my colleagues. They pretty much hit all the aspects. Just one final point. It's the unified omnichannel experience that has been enhancing constantly, which is part of this entire digital transformation driver. And then because of the customer analytics, the gap between desktop experience and mobile experience has been diminishing to a greater extent.
Absolutely. Let's maybe shift gears a little bit. We haven't touched much on regulatory and compliance and those topics, and I'll kind of open this up to everybody, and I'll kick it off with maybe the first question around technology and helping banks, within the process of regulatory needs. How does it improve risk management? At the end of the day, just like everything else, the technology can both help from a regulatory perspective, and it can also create some risk. So let's maybe touch a little bit on regulatory compliance and the impacts and benefits there, and some of the things that potentially pitfalls that people could fall into.
Sure. I think when 2008, the financial crisis situation came in, and suddenly there were a lot of regulations around BSA, AML, or KYC, and then again later on, a lot of regulations like CCAR, LQR. When all this came, imagine without technology being in place, how difficult that would have been to capture the information of your customer or track the fraudulent activities. So technology has immensely helped, in implementing these regulations, regulatory requirements, and then subsequently provide the reports on a daily basis or a weekly or monthly, quarterly as needed by the Fed or other regulatory departments. So technology has immensely helped in these areas over last decade and a half, especially. That's my view.
I think, technology gives us the opportunity to detect anomalies, to look at situations where there may be fraud. Maybe, Brett, we're used to you logging into your mobile app from, the East Coast, and all of a sudden you're in England, and it's like, oh, how do you get there that fast, right? Maybe we should send a little fraud alert here.
Yep.
It's huge in that risk control area. Automating your risk testing. So many of us have regulations and things that we need to ensure that we're in compliance on. Automating that testing often helps us to avoid human manual mistakes, accidentally deleted a row on the Excel spreadsheet or something along those lines. So when it comes to risk and compliance and regulatory, your technology can and will protect you, provided that you have the right program set around it.
Just to add a bit more, we have to see this landscape in three ways. There is this regulatory compliance need, there is the security compliance need, and for each and every individual organization, there will be certain policy and governance in place, which the organization need to be in compliance with. Now, this disruption with automation or overall digital experience and the capabilities that we are able to leverage from third parties, they're expediting adoption of any new regulatory demands, whether it's data privacy rules or whether it's managing some of these cycles like CCAR, which Srini mentioned, or security concerns. Perhaps this is something that we might discuss elaborately in the next few minutes, but essentially automation and detection of security threats by checking the patterns, by having this constant monitoring 24/7, by trying to look at this our entire network, whether it's network or data space, etc., and managing that risk posture across the board. these are really helpful. And then when it comes to organization policies, in terms of making sure that this automated processes are helping us not have a certain amount of data or certain type of data going out of the four walls of the organization. For instance, most of us experience when we send out certain emails to see these alerts that we cannot send this information contained in this email go out of this domain into external world.
Yeah, no, absolutely. It's definitely, as even Jennifer, you touched on before, right? You've got an individual or individuals in the organization that are driving technology and automation. You didn't have the larger, business units working together, pulling on the oars, but you've also got to then work in stride with legal and compliance and make sure it's all tied together and everyone's kind of on the same page. So great points from the group. We talked a little bit about rules and automation. So if we maybe pivot out of the regulatory side of things and maybe more towards kind of the key focus areas of engagement, going beyond the transaction. Christina, from an overall automation and rules perspective, how can marketing, product, and analytics define the automation rules? Let's spend a little bit of time there going deeper on that.
So I think maybe we should start backwards with those three components because we've been talking so much about analytics and data, right? So analytics and data, I think we've all said foundation for everything. It drives the engine, right? It powers innovation, optimization, and decision-making, which is so important. But now if we hone in on just financial institutions and leveraging data for better engagement, purchasing data provides the most powerful opportunity, I believe. Knowing what customers are really trying to do, what stage of the life they're in, what they're trying to do, those activities in that, I'll say that credit card life cycle, but how a customer spends their money and the pace at which they transact, it just tells us so much, right? And creates opportunity for what we like to call like hyper personalization. So if I think about, let's say, automation rules and defining them, I'll first think, number one, analytics, understand what customers need, segment those customers based on known attributes and activity, things like platform usage, purchasing history, things they're most interested in, something that they buy often, right? Because segmentation now is more than just about age and income, but it's about how does the customer prefer to interact with me? I think we've talked about that a bit during this webinar. But how a consumer wants to engage with you should really be what the rules are based on. And then I would say, like, number two, thinking about product and marketing, they go hand in hand. Just because you build a great product doesn't mean that people will actually come and that they'll actually use it. And so I think that content gives you the opportunity to do that, to say, oh, hey, by the way, you can now bank with us in this way. Or here is a product that we have. You notice that you're now interested in purchasing a home. Now might be the time to look at interest rates or apply for a home loan. But I would say like those two work together, but with automation rules, it's really what does the customer need from a business perspective? What are we trying to accomplish? When is it best to engage with the customer? And then build great products around that.
Can I add on, Brett?
Absolutely.
What I love about what Christina said is years and years and years, we've shown, let me show you what I have. Here's my product. Here's my product. Here's my product. She just talked to us about how to flip that from to know you. So how to go from show you to know you, and how to put that customer in the center of every interaction. And with that information that is collected and the way that the marketing intelligence has expanded for us, it allows those two to work in tandem. It's hard to separate product and marketing anymore because marketing knows so much about what we as a customer do, and the things that they do with our products and their behaviors there don't just necessarily drive that next, let me show you my next product. It drives loyalty and engagement with our brands.
And I think you mentioned, Jennifer, earlier, my favorite place, Amazon, right? What they do a good job at
Boxes
is
showing up on the porch on a daily, right?
they're amazing. from a banking or fintech space, we learn so much for them. I read a lot of case studies relating to like the way in which how they think about the consumer, right? Not being annoying when I come into the app, but playing things back to me. And I think one thing that Amazon is good at, because they know my behavior, the things that I purchase, there's certain things they just don't present to me. Like I don't wear red, so they're never going to present me clothing in the color red. So like, oh, Christina is really neutral hues. These are the pieces that we're going to show back to her. And they also know, now it's time for me to reorder my water, right? There are certain things that they know where when I log back in, my next experience with them is based on past behavior. And I think the better that we get at that in banking, the more we'll have more of that brand loyalty to say, my bank really knows me. They're sending me content in the moments that matter so that I can continue building that relationship, because that's what relationships are about, getting to know me as I grow. There is just so much opportunity when we think about, what is engagement really between you and the customer? And it should be, what do they need from me? Let me be there before that thing happens. So there's so many opportunities in that. That's my wheelhouse thing that I love to talk about. How do we make people loyal? And it's really just about, I'll say speed and empathy, like those two things. Be there when it matters quickly, because when it comes to money, I want you to be there on time. And then show me empathy. Like, don't send me a ton of emails, push notifications, but send it to me in the moment that you know that I need it the most, in a way that I expect to be communicated to.
Great
There's
points.
There's a lot of room for improvement there, right? Because to your point, I think they just push everything at you, so they're not taking some of the past trends and history of things that you've done or doing with them, and then making sure that they learn from that, and or kind of build off of the fact that, hey, maybe you're in a certain situation or something's come up, and here's how they can help, right? As opposed to being more geared towards helping you, they're just sending you everything, and it just becomes overload. Sorry, go ahead, Satya. Did you have something?
I was saying,
Srinivas?
in addition to what Jennifer and Christina were mentioning, the right set of offers and rewards, right, based on the customer behavior, based on if customer is spending much on travel or clothing or watching movies, the right set of offers can be made, discount in terms of discounts or freebies or rewards if you spend more. So that is where the combination of product marketing and analytics is going to be is going to be very critical there. And then this is definitely going to improve the customer experience in terms of whether we call it as empathy in case of certain situations or customer engagement in certain situations.
I think we can all agree that automation is improving the efficiency within banks and financial institutions. Let's maybe talk a little bit about measurement. How are banks measuring success?
Depends on the market they are in. But most often, or most common KPI will be the customer satisfaction. All banks have to start from there, whether it's through surveys, through some of the measuring of the net promoter scores, etc. Then the overall employee engagement. Does all the employees on the ground, not just at the board level or the C-suite level, understand and value the direction in which the bank is going? And then putting their efforts in improving or in moving towards that vision, that common vision. That's also very important, because both cannot coexist, in my opinion. The customer satisfaction will be tied to the employee engagement and the vision alignment. Additionally, there are a lot of other aspects in terms of every business is working for the bottom line, for the ROI. So is there any improvement in the overall ROI? And what is our speed to market now? Are we able to launch the products that we're able to envision using all this automation and technology on time and able to get that market position or capture that market segment, right? And then finally, with every ROI, we had to also assess the overall TCO, the total cost of ownership of all those products. Are we able to further improve our efficiency and further minimize the TCO or the cost savings? These are some of the KPIs I could think of.
Few
I think
more
the one
that come to my mind are I'm sorry, the year,
Go for it.
quarter-on-quarter or year-on-year customer acquisition rate, and then how are you improving your market coverage? That is other aspect, and then also, of course, Satya mentioned in terms of ROI. I'm talking it in terms of assets, right? How are your assets increasing in terms of deposits and all other metrics that banks typically track?
And you mentioned acquisition, but we also measure who's staying. So that customer retention. And if they aren't staying, why might they not be staying? I think the other key metrics that folks take a look at is how many times does somebody have to call our agent to get done what they need done? And are we able to drive any self-service that allows the customer to not have to make that phone call unless they really want to?
And I would add to that, customer acquisition, retention is huge, right? We want you to stay with us. And then I would say, thinking about top of wallet, looking at customers to say, are they using us for the essentials, which is in my mind, like gas, grocery, healthcare, those basic needs. If you're using one single card for that, more than likely you're committed. The moment those essentials drop off, you more than likely have chosen a different card. Now let's send you offers to try to pull you back. And the last I would think is really just relationship banking. If I have a debit card with you, a savings account, home loans now, and I'm expanding out further, I think that's also another thing to measure is Christina doing more with me, or is she just using me for just like a savings account? Like those things I think are important to look at.
It's a huge one, Christina.
Yeah, great points. Good. Well, as we kind of come to the end of our session today, let's kind of wrap things up with scalability and scaling. What are some of the obstacles and challenges? How do you scale automation? How do you do more, without breaking things? Let's jump into that, and I'll just kind of open that up, and we can kind of go around, and then we'll kind of wrap things up. And who wants to go first?
Yeah, it depends on the challenges that the bank is facing. For example, again, it all depends on the business drivers, Brett. Everything need to be tied down to the business drivers. So what challenges they're facing currently, and will automation help? Certainly. But will automation alone help? No. We didn't have the right governance and controls in place. But how do we achieve that right governance? Controls could be achieved through automation, but how about governance? Governance could be achieved through executive buy-in. The mandate coming from top down in terms of what we are trying to achieve, how we are aligning those measures to the business drivers, and having that establishing the right governance with the right structure to support the automation, to support the scalability needs, which will eventually have the impact on their market position. Technically speaking, with the digital transformation, with the kind of cloud service providers that are available in the market, and the vast amount of the services that are available at our fingertips, I think scalability is improving further than before, including sustainable capabilities and sustainable practices in acquiring more assets, infrastructure, or data capabilities, etc., in less amount of time, and quickly deliver those disruptive capabilities to our clients.
To pile on to what Satya is saying, it does all have to be rooted in the business value. Automation for automation's sake is not a good use of the company's time or money. And many of us, especially in the regulatory environments that we're in, we do a lot of process mapping. I don't know about you all, but we do a lot of process mapping. One of the things that tools do for us today is show us, where are those overlaps? Where are those steps that maybe we're getting stuck and could go a little faster? And so when you take your business value aligned with data you already have to show you where you may get the most value, it gives you a really great place to start your automation journey and scale it. Some areas scale it through, there's so many different names, tiger teams, people that can move from organization to organization and set you on the right path. So it's about priority, where it's going to make the most sense, and the value you need to drive for your organization.
So from my perspective, identifying the right use cases and then the business value, as Jennifer mentioned, right? So those are the key things. What in terms of challenges or blockers, automation needs investment, right? So how do you convince your board? How do you convince your stakeholders, investors that yes, this is going to yield me or generate the ROI in a shorter period than on a waiting for 6 years, 8 years. That appetite to spend that money to get the quality out of automation is going to be a big challenge for the organizations.
Absolutely.
Just to add a bit, Brett, talking about challenges and obstacles, I think the most important challenge will be the culture, the automation culture. We need to set up that culture. We need to train our entire organization to adapt the automation culture, because unless, as I said, I was talking about employee engagement in terms of KPI, once we are able to shift that culture towards automation, things will go smooth. I was talking about executive buy-in with a top-down mandate, but it's also equally important to have that culture in place, which will drive the bottom-up change. And when these both work together, we will see that shift. But I would say that's one of the core challenges. There are some other minor challenges in terms of ever increasing or ever changing regulatory needs, evolving cybersecurity threats, and all these automation capabilities and services need to catch up with these challenges. And of course, the data privacy has been a huge threat across the board, and some of those aspects as well. But I would say the most important challenge, which require a lot of attention, is changing that culture with the executive buy-in.
Absolutely. Great. Team, panelists, anything that we didn't cover? Any last parting comments, things you want to add before we kind
Do we
of
have
wrap
one more
up?
hour?
What's
Do
that?
we have one more hour to talk about those?
Hey, we can extend out the time if you've got time.
No, Brett, I think pretty much we covered a lot of important aspects.
That's
This
been
is an ocean. We cannot
I
boil the
think this is
entire
a great
ocean in 1 hour.
conversation, great mind shift.
Yeah. As I was saying, we cannot boil the ocean in 1 hour, but Brett, you pretty much covered all the important aspects. And I appreciate how you drove these conversations across the panelists.
Absolutely.
I've enjoyed the time. I hope you guys have enjoyed it as well.
Thank you, Brett. And
Sorry, then real quick, anyone else? Jennifer, Christina, anything? Srinivas? Okay.
No, I'm good. Again, thanks everyone. It's a great conversation over the last 60 to 75 minutes.
yeah.
Absolutely.
Thank you, Brett, for being a great, moderator for this panel, and thanks a lot, Christina, Jennifer, Srinivas, and Satya for sharing your views. I think it created a lot of value addition for us as well as for the audience. I'm sure about that. So let me give a closing remarks so that we can close this webinar. So first of all, we would like to express our appreciation to all our community partners who have been there since beginning with us. The distinguished speakers who took their time and came for this particular webinar, and all the attendees who were engaged in this forum, creating a space for knowledge enrichment. Our panel speakers, as I said, were outstanding, and we value their willingness to collaborate and share the valuable insights. In case anybody joined late and missed any part of the session and want to revisit it, today's event will be available on our company's YouTube page for your convenience. Exciting technological advancements are on the horizon, and we are thrilled to explore more in year 2024. Looking ahead, we have a diverse lineup for the coming year, focusing on different sectors, including banking, financial, insurance. Then we have also covered some in telecom, some in retail, healthcare, few in supply chain, manufacturing, few things we are also planning to cover in the energy and utility sector as well. So stay connected with us for continuous learning. For more technological updates, visit our website and social media channels. We'll be sharing wealth of knowledge, including details, announcement for upcoming events, and much more, aiding you in registration and getting to attend the same. We look forward to your support. Please like and share our content on the social media. Also, a heartfelt thanks to InfoVision, who is our knowledge and innovation partner, and Digit7, who is our technology partner. We thoroughly enjoyed bringing this session to you and hope you found it as enjoyable as we did. We eagerly anticipate more sessions with you in the near future. Take care, have a great day and a great weekend ahead. Thank you.
Everyone.
Thank you.